Hello everyone. Welcome back to Stock Market Meridian. Today is 26th August 2026 and you're watching today's post-market report. Let's begin with today's market action. The Indian market started on a flat note, but selling pressure remained throughout the session. And by the end of the day, both major benchmarks slipped into the negative zone. Looking at the sectors, IT and FMCG emerged as the top losers, while metal and chemical stocks were among today's top gainers. Now, let's move to the stocks and corporate developments that investors need to watch. Let's start with Lupin, where a major legal hurdle has finally been cleared. A US federal court has ruled in favor of Lupin in the patent litigation involving its generic version of the cystic fibrosis drug ivocaftor. The court ruled that Lupin's generic formulation does not infringe Vertex Pharmaceuticals' patents and also confirmed its equivalence to the reference drug. The biggest positive? Lupin has secured first-to-file exclusivity, which can provide a 180-day generic marketing exclusivity window once the product launches. Vertex had filed the lawsuit back in July 2022, so this is a major breakthrough after several years of litigation. And the opportunity is significant. The US market for this cystic fibrosis drug is estimated at around $700 million, or more than 5,800 crore rupees. Because cystic fibrosis treatments are highly specialized, limited generic competition could allow Lupin to capture attractive market share and margins. So this victory not only removes a major patent roadblock, but could also strengthen Lupin's high-margin complex generics business in the US. That makes this one of the more important long-term developments for Lupin investors. Now, let's talk about today's massive block deals. Around 6,900 crore rupee worth of shares changed hands across 5 major companies. We already covered the Welspun Corp and Grow block deals in our pre-market report. So let's focus on PhysicsWallah. Here's what made this deal interesting. Around 4.67 crore shares, representing nearly 1.6% of the company's equity, changed hands through the NSE block deal window. The transaction was worth approximately 550 crore rupees at a price of rupees 117.72 rupees per share. But instead of falling after the block deal, PhysicsWallah shares actually moved higher. The stock gained around 4.3%, touching approximately rupees 126.60 in early afternoon trade. That means the stock was trading nearly 7.5% above the block deal price. In simple terms, strong buying demand appeared to absorb the secondary supply. So while the block deal itself was large, the market reaction was even more interesting. Buyers clearly remained confident in the stock. Next, an important development from ICICI Prudential. One of the company's core promoters, Prudential Corporation Holdings, has announced plans to sell up to 2% of its equity stake through the open market on August 27. The sale involves approximately 98.85 lakh shares. And the reason is straightforward: to comply with SEBI's minimum public shareholding requirements. After the transaction, promoter and promoter group holding is expected to decline from around 87.60% to 85.60%. Importantly, ICICI Bank and its group entities will not participate in the purchase, while connected persons of Prudential are also restricted from participating. So investors should keep an eye on the stock tomorrow, because this large promoter sale could influence short-term trading activity. But fundamentally, the transaction is being carried out primarily for regulatory compliance, rather than because of a change in the company's business outlook. Now, DCB Bank is back in focus after reports of possible private equity interest triggered strong movement in the stock. The NSE asked the bank to clarify media reports suggesting that DCB Bank was in talks with PE firms for a capital infusion. The bank's response? DCB Bank said that as of now, there is no material event or information requiring disclosure under Regulation 30. The bank also said it was not aware of any undisclosed price-sensitive information behind the recent price or volume movement. However, DCB did acknowledge that it routinely evaluates strategic and growth opportunities. And there is an important background detail. Shareholders had already approved a fundraising plan that allows the bank to raise up to 2,000 crores, including up to 1,500 crores through equity. The bank currently has a capital adequacy ratio of 17.03% and Tier 1 capital of 14.90% as of June 2026. Shares gained more than 5% today. So the PE speculation remains exactly that. Speculation for now, but investors will clearly be watching for any official development. Now here's an interesting turnaround story. PVR INOX has moved from heavy debt to a net cash positive position, and that has opened the door to something investors haven't seen from the company before: a potential share buyback. The board will meet on August 31 to consider the company's first ever share buyback proposal. The stock has already gained around 22% year to date and recently touched a fresh 52-week high. But the bigger story is the balance sheet. At the time of the PVR INOX merger, the company carried around 1430 crore rupees of net debt. As of June 30, 2026, it had moved into a net cash position of 80.7 crore rupees. The company is also planning to add around 90 to 100 new screens in FY27, largely through capital-efficient revenue-sharing formats. Brokerages remain broadly positive, although there is some debate over whether surplus cash should be used for a buyback or further debt reduction. One brokerage has a buy rating with a Rs 2400 target price, while 18 analysts currently maintain buy ratings with 0 sell ratings. So the August 31 board meeting could be an important catalyst for the stock. Next up, a major order win for Adani Energy Solutions. The company has emerged as the lowest bidder in a tariff-based competitive bidding process for a major transmission project in Maharashtra. The estimated project cost is around Rs 4,700 crores. The project will help evacuate up to 4,500 megawatts of renewable and pumped storage power near Satara. It will include a major 765/400 kV substation, high-voltage transmission lines, and other transmission infrastructure. The project is expected to be completed within 36 months. And this win takes Adani Energy Solutions' transmission order book to approximately Rs 85,000 crore. The company's total transmission network will also expand further, with the project adding around 562 circuit kilometers and 9,000 MVA of transformation capacity. The stock was trading around 1606.60 rupees, with gains of approximately 54% year-to-date and more than 100% over the past year. So another large order strengthens the company's already massive transmission pipeline. Now let's shift to the metal space. Hindustan Zinc has rallied around 11% over the past month, and global brokerage Jefferies has turned more positive on the stock. The reason? A sharp recovery in global zinc prices. Spot zinc prices are now around 15% above their Q1 average, reversing earlier concerns about excess supply from China. At the same time, Hindustan Zinc has another major advantage. Silver. The company is India's only listed pure-play silver producer, giving it direct exposure to the strong move in silver prices. Silver has gained more than 23% from its July lows. Jefferies has therefore assigned a buy rating to Hindustan Zinc, while maintaining a hold view on Hindalco. The key takeaway is simple. Stronger zinc prices plus higher silver prices could provide a powerful earnings tailwind for Hindustan Zinc. Now, an interesting diversification move from SEPC. The company's Sharjah-based subsidiary, SEPC FZE, has received in-principle approval to acquire 100% ownership of Vintality Petroleum FZE. Vintality operates in the import, export, and international trading of refined petroleum products. The interesting part is that the acquisition requires zero cash outflow from SEPC's parent company. That allows SEPC to enter a new international trading business while preserving its liquidity. The company will retain around 95.75% ownership in the Sharjah subsidiary after the transaction structure is completed. And this comes shortly after SEPC secured an 854.57 crore rupees EPC contract from SAIL for the IISCO steel plant expansion. SEPC shares gained more than 4% on the announcement. So the company is simultaneously expanding its EPC business and exploring new international revenue opportunities. Now let's talk about IDBI Bank, where unusual trading activity has once again caught investors' attention. The stock surged as much as 5.89% today, taking its gains over the last 5 sessions to nearly 16%. The bank clarified that there is no undisclosed price-sensitive information or impending corporate announcement from its side. It also reiterated that the strategic disinvestment process is being handled by DPAM, the government's investment and public asset management department. Reports suggest that the IDBI Bank Fairfax financial transaction could be moving closer to final government clearances. The bank itself has no direct role in the negotiations, as the privatization is being handled through the government's confidential competitive bidding process. So while today's rally is being driven largely by expectations and speculation, the actual trigger investors are waiting for is an official update on the strategic disinvestment process. Now, a major development in the telecom space. According to a CNBC Awaaz report, Vodafone Idea and state-owned BSNL have agreed to expand their network sharing partnership across all telecom circles in India. The agreement reportedly covers intra-circle roaming, inter-circle roaming, telecom towers, and optical fiber networks. For Vodafone Idea, this could create an opportunity to monetize its network capacity and earn additional revenue from BSNL subscribers using its infrastructure. For BSNL, network sharing could help expand coverage while reducing the need for massive upfront capital expenditure. The arrangement expands on their earlier network sharing setup in Delhi and Mumbai. So if implemented at scale, this partnership could improve network reach for both operators while making better use of existing telecom infrastructure. Now, here's one of the biggest execution stories of the day. KPI Green Energy has energized more than 630 megawatt DC of renewable capacity in just 3 months, from June through August. And here's why that number is impressive. The company had energized around 533 megawatt cumulatively over nearly 17 years, up to December 2024. In other words, it has now commissioned more capacity in a single 3-month period than it had accumulated over almost 17 years. The capacity includes IPP, EPC, and captive power projects. More operational IPP capacity means greater potential for recurring power sale revenue, while EPC projects provide additional cash flows. This execution also supports the KP Group's long-term ambition of reaching more than 10 gigawatt of renewable capacity by 2030. The company is expanding across solar, wind, hybrid energy, battery storage, and green hydrogen. So, for investors watching the renewable energy theme, this is a significant execution milestone. Now, a major development for India's defense and aerospace industry. HAL and Safran helicopter engines have signed the final contract for their joint venture, Safran Helicopter Engines. The program will develop a new heavy turboshaft engine called Aravalli. The engine will be in the 3500 to 4000 shaft horsepower class and is being developed for India's indigenous 13-ton Indian multi-role helicopter along with its naval version. What's especially important? This is the first co-development program of this heavy power category for Safran helicopter engines. The partnership will cover design, development, manufacturing, supply, and life cycle support. It will also help establish a stronger MRO ecosystem in India and reduce dependence on foreign propulsion technology. And the potential isn't limited to defense. The engine could eventually have applications in offshore energy, utility operations, and VVIP transportation. So this is more than just an engine development agreement. It is another major step towards indigenous helicopter propulsion technology and strategic self-reliance. Next, another major renewable energy order. GK Energy has secured a mandate worth approximately 454.50 crore rupees for installing 1 lakh grid-connected rooftop solar systems. Each household will receive a 1 kilowatt rooftop solar system, taking the total project capacity to 100 megawatts. The contract covers the complete process, from design and supply to installation, testing, and commissioning. It also includes 5 years of operation and maintenance, creating an additional recurring service opportunity. Each individual installation is expected to be completed within 60 days of the respective work order. So this is a large-scale residential solar opportunity that combines significant upfront project execution with longer-term O&M revenue. Next, Seagal India has emerged as the L1 bidder for a major interstate transmission project. The project will evacuate renewable power from Lakadia, Jamkhambaliya, and Jamnagar in Gujarat. The project involves a 765/400 kV substation and around 300 kilometers of high-voltage transmission lines. The estimated project consideration is around 608.67 crore rupees, with construction expected to take approximately 36 months. But here's what makes this project particularly interesting. Seagal will operate the asset under a 35-year concession period, creating the potential for long-duration transmission revenues. The company estimates cumulative lifetime annuity revenue of more than 21,300 crore rupees. This also helps Seagal diversify beyond traditional EPC contracting and move further into long-term utility assets. And finally, a major legal relief for Tata Steel. The Supreme Court has set aside a GST demand of 890.52 crore rupees along with an equal penalty of another 890.52 crore rupees plus applicable interest. That means the total exposure was more than 1,780 crore rupees. The dispute related to the company's input tax credit claims for FY 2019 through FY 2021. The Supreme Court allowed Tata Steel's appeal and quashed the original show cause notice and order. However, the department has been given liberty to initiate fresh proceedings before February 28, 2026, if supported by the required foundational facts. At the same time, another major legal matter involving Tata Steel is before the Supreme Court. This relates to mining royalty and dispatch penalties in Odisha, involving earlier demands of more than Rs 3,313 crore. The Odisha High Court had previously quashed the two demand notices, and the Odisha government subsequently approached the Supreme Court. The Supreme Court has now issued notice to Tata Steel, with the matter returnable on October 5, 2026. So while Tata Steel has secured significant relief in the GST matter, investors will continue watching the Odisha mining case closely.
And that brings us to the end of today's post-market report. If you found this analysis useful, make sure to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian for daily pre-market and post-market reports. I'll be back tomorrow morning with another detailed pre-market report covering global markets, important corporate developments, commodities, and the key factors that could influence the Indian market before the opening bell. Until then, signing off, Jai Hind.